Seventh problem, goodwill treatment is cash, goodwill brought in cash withdrawn by the old partners. This is the topic. Second year, English medium, accountancy 2. Admission of a partner. Seventh problem, goodwill treatment, cash, goodwill brought in cash withdrawn by the old partners. This is especially you have to remember one thing. Okay, come to the problem. Seventh problem, Ganesh, Shankar are partners sharing profit and losses in the ratio 3:2. It is, remember, this is the old ratio of old partners. So it is all so need at the distribution of revaluation profit, at the distribution of goodwill, at the distribution of general reserves. So old ratio is 3:2, total ratio is 5. Next, cash 40,000, bills receivable 45,000, sundry debtors 90,000, stock 80,000, furniture is 50,000, building is 1 lakh rupees. This is the assets. Liability side, sundry creditors 50,000, bills payable 60,000, bank loan 40,000, general reserves 30,000, capitals Ganesh 1,50,000 and Shankar 75,000. This is the and liabilities. And observe a clear observation in the part of the adjustments. On April 1st, 2020, they decided and Mr. Balu 1/4 of share in the future profits. The conditions of the admissions are: Balu should bring 75,000 as capital and goodwill and 40,000. Is bring in form of capital 75,000, goodwill is 40,000. It is, remember one thing. The amount of goodwill is withdrawn from the business by old partners. What is the amount is bring by the new partner as a goodwill? The amount will be taken by the old partners in the old ratio. So this is, remember one thing. In previous problem, only goodwill brought in cash. It is the first condition. It is the second condition, goodwill brought in cash withdrawn by the old partners. This is the second condition. So it is, remember one thing. Building appreciated by 20%. So building value is 1 lakh rupees. If the 1 lakh rupees at the 20% means 20,000 rupees on building appreciation. Appreciation of any asset, it must be recorded on the credit side of the revaluation account. Why? Because it is the profit. Furniture and stock and to be depreciated by 5%. And furniture value is and 50,000 at the rate of 5%, 2,500 rupees. It is depreciation, it is loss. So it must be debited to revaluation account, debit side, to furniture account, 50,000 into 5/100. Next, stock is also 80,000 rupees to stock and it is also depreciation, it is a loss. So it must be debited to revaluation account, debit side. This is the another one. And 80,000 at the rate of 5%, 4,000 rupees is depreciation and stock. Next, there is an unrecorded liability irrespective of and workman compensation. If any liability is increasing, it must be debited in revaluation account. Remember one thing, decreasing value of assets, increasing value of liability, unrecorded liability, it should be debited to revaluation account, debit side. It is, remember one thing. Next, give journal entries, necessary ledger accounts and balance sheet. Already we are and discuss in the first problem, the same manner you have to prepare the journal entries now only and explain about the how to prepare the ledger accounts, revaluation account, cash account, goodwill account, capital accounts and balance sheet. The most of the problems and in examination point of view, 90% of the problems only prepare necessary ledger accounts in the examination they are asking. So and entries is also compulsory. So already we are explaining the first problem, the same entries will be pass on this problem. Okay. And come to the problem. When you are preparing the revaluation account, we must and clean observation in the adjustment point of view. Which assets value increasing, which assets value decreasing, which liabilities value increasing, which liabilities value decreasing. It must be remember one thing. So come to the revaluation, and there are two assets are depreciated. One is the furniture, 50,000 at the rate of 5%, and another one is stock, 80,000 at the rate of 5%. This is the two furniture account, 50,000, 5 by 100 means 2,500 rupees. Stock 80,000, 5 by 100, 4,000 rupees. So unrecorded liabilities also record in the revaluation account debit side. So workman compensation 3,000 rupees is recorded here only. Unrecorded liability debit side, unrecorded assets if any there, it must be credit side of the revaluation account. So another one, and appreciation of building. So appreciation of building 1 lakh rupees, 20%, 20,000 rupees. So revaluation aspects are completed debit side as well as credit side. Compare which side is the highest amount. First total them. 20,000 rupees, 20,000 rupees. So 20,000 rupees is credit and debit is and 9,500 we are get profit and 10,500 rupees. And it is as per the nominal account, all expenses losses debit, all incomes and profits credit. So and profit is more than the losses. It means net loss, net profit. So net profit must be transferred to capital account as per the old ratio. Old ratio 10,500 into 3 by 5, 6,300, 10,500 into 2 by 5 and 4,200 rupees. This is the calculation point. So if any revaluation profit, it must be transferred to old partners as per the old ratio. It is remember one thing. So this is the total amount is 10,500. It is about a revaluation account. Come to the cash account. This is the opening balance given in the balance sheet. Cash, Balu capital is 75,000 and goodwill brought in cash 40,000. Total is 1,55,000 rupees. In that, the old partners are taking goodwill value or withdrawn by the goodwill value. So 40,000 at the rate of 3 by 5, 24,000, 40,000 2 by 5 and 16,000. Total amount is 40,000 is taken by the old partners. So as per the real account, what goes out credit? So 40,000 is going outside, it is taken by the old partners as per the old ratio. This is remember one thing. 1,55,000 rupees minus 40,000 rupees we get 1,15,000 rupees net balance of cash at the end of the admission. So the same balance carried on must be transferred to balance sheet asset side, 1,15,000 rupees in asset side. This is about cash account. So here in cash account, goodwill account will be debited. In the same, in goodwill account they are and says cash account and 40,000 rupees. The same goodwill amount must be distributed among the old partners. Ganesh 40,000 3 by 5 and 24,000, 40,000 2 by 5 and 16,000. Total amount is 40,000. Total amount is 40,000. This is about goodwill. And it is second condition treatment. Goodwill withdrawn by the old partners. Goodwill brought in cash, withdrawn by the old partner. This is a second condition problem. Next, come to the capital accounts. So when we are preparing the capital account, first of all, balance brought down. It is appearing in the balance sheet liability side. Given problem, Ganesh is 1,50,000 rupees and Shankar is 75,000 rupees. This is the opening balance of the old partners, capital balance of the old partners. Second one, and capital bring by the Balu. So by cash account, amount is 75,000 and bring in cash as a capital by the Balu. So amount in Balu account and we are recorded. Revaluation account profit as per this revaluation account profit 6,300, 4,200 rupees. The same amount must be transferred to by revaluation account 6,300, 4,200 rupees. This is the revaluation profit. Goodwill amount here only 24,000 and 16,000. In goodwill account we are mentioned Ganesh capital and Shankar capital. In capital account we are mentioned goodwill account 24,000 rupees and 16,000 rupees. And general reserves is given in the problem balance sheet. So general reserve is 30,000 rupees, 30,000 rupees distributed among the old partners. So among the old partners nothing but 30,000 into 3 by 5, 30,000 into 2 by 5. So 5 anja, 5 6 ja means 18,000, next 12,000. 6,000, 6,000 into 2, 12,000 rupees. This is the and the general reserves. Total them Balu is 75,000, Shankar 1,07,200 rupees and Ganesh 1,98,200 rupees. The same amount must be recorded in the total columns 1,98,300, 1,07,200, 75,000 rupees. So from 1,98,300 deduct 24,000 we are getting 1,74,300. So it is nothing but difference between 1,98,300 and 24,000 we get 1,74,300 rupees. Here also 1,07,200 minus 16,000. So 91,200 rupees is difference between 1,07,200 minus 16,000 we are get and 91,200. 75,000 no debit transaction, so same 75,000 must be recorded as a balance carried on. This is differences between this one and this one. This is difference between this one and this one. This is there is no any aspect, so the 75,000 as usual write balance carried on. It must be balance sheet liability side. This is the capital accounts. So and why you have to write cash account means and a goodwill amount withdrawn by the old partners in the old ratio 24,000 and 16,000. This is the and one way classification. Next come to the and cash balance as per the cash account 1,15,000 rupees as per the account. Next bills receivable 45,000 rupees and it must be recorded here only as per the balance sheet value. Next sundry debtors 90,000 it is recorded as usual and what are the amount is given in the balance sheet same as usual 90,000 rupees. Stock 80,000 rupees, depreciation is 4,000 rupees. We must deduct from the and stock value 76,000 rupees. Furniture value is 50,000 rupees minus depreciation 2,500 rupees, 47,500 rupees. Building value 1 lakh rupees, appreciation 20,000, 1,20,000. The total amount is 4,93,500 rupees. Here also liability side and what are the liabilities given in the old balance sheet? Bills payable given in the liability side, sundry creditors given in the liability side, bank loans given in the liability side. Workman compensation is liability arise. So same liability must be recorded in the liability side, workman compensation. Next capital accounts. So what are the amounts are find out through capital accounts? This one, this one, this one. It must be and record in the balance sheet Ganesh capital 1,74,300 rupees and Shankar capital 91,200 rupees and Balu capital 75,000 rupees. Total 3,40,500 rupees. This is the and three partners capital 3,40,500 rupees. So total amount is liability side 4,93,500, And asset side 4,93,500. This is about seventh problem. Especially seventh problem is goodwill bring in cash withdrawn by the old partners. This is the condition. You have to remember one thing. In the previous problem, only goodwill brought in cash or retained in the business. Say sometimes, so the same goodwill treatment just like first problem. If any goodwill withdrawn by the old partner says, just like this is the seventh problem is goodwill condition. Goodwill bring in cash withdrawn by the old partners. This is the problem. You have to remember one thing. Suppose if you want to write the journal entries and first entry, revaluation account data to furniture account to stock account to workman compensation. This is the first entry. Next second entry, building account data to revaluation account, second entry. Next third entry for distribution of profit, revaluation account data to partners capital to Ganesh capital account to Shankar capital account. This is the third entry. So first entry for losses, second entry for appreciation, third entry for distribution of profit. For distribution of profit, revaluation account data to Ganesh capital account to Shankar capital account. This is for third entry. The total is first entry, this is second entry, this is his third entry, and fourth entry for and bring cash as a capital and goodwill. This is the fourth entry. Cash account data, Mr. Balu capital account data to goodwill account. This is the fourth entry. Fifth entry, goodwill distribution among the partners, old partners. So goodwill account data to Ganesh capital to Shankar capital. This is the fifth entry. Next sixth entry, and this is the sixth entry for and distribution of general reserves. This is the sixth entry. General reserve account data to partners capital account, Ganesh capital account to Shankar capital account. Just like it is just like goodwill distribution as usual in this problem. So goodwill account data to Ganesh account, Shankar account. When you are right in the same manner, general reserve account data to Ganesh capital to Shankar capital, we have to write for the entry general reserve account data to Ganesh account to Shankar account. This is the distribution of general reserves. Seventh entry for taking cash and by the old partners. So Ganesh capital account data, Shankar capital account data, two aspects are debited, two cash account means goodwill withdrawn by the old partners, seventh entry. So total entries are 7 entries, and when you are right entries in the bookshop and journal entries. When you are, suppose in the problem, if they are given in the problem, prepare journal entries. First you have to write journal entries, then after prepare the ledger accounts. This is the way. First you are left the first one page, and after preparation of final accounts, then write the journal entries. It is the better way. Either you know the journal entries very well, first write the journal entries and prepare the ledger accounts as your wish. Journal entries వచ్చినట్లయితే డైరెక్ట్ రాయండి. జర్నల్ ఎంట్రీస్ మనకి ఇబ్బంది అనిపించినప్పుడు ఫైనల్ అకౌంట్స్ వేసి ఫైనల్ అకౌంట్స్ని బేస్ చేసుకుని మనం ఎంట్రీస్ రాయొచ్చు. దిస్ ఇస్ ద సెకండ్ ఆప్షన్. ఓకే.